property companies have been quite a bit in the news in the last week, and the South African listed property market is 48 times the size it was 12 years ago. The unlisted sector also remains substantial. It has some of the country's most prized assets, and analysts say some of these assets and funds could they find their way into the listed space, which is competitive, but there's also a lack of quality stock available. So some interesting issues here. And joining us now to discuss the property sector is Morris Shapiro from Alternative Real Estate Fund, where he's a fund manager, and Francois Veruli, hoping to join us in a moment from Cape Town. He is professor at the University of UCT. Morris, just give us the landscape here. There's some very big companies in big enterprises in South Africa. We talked there about 48 times the size it was 12 years ago, which seems unbelievable. Another stat we picked up is that the market cap has gone in about a decade of that sector from 5 billion to 240 billion rand.
Oh, that's correct. I think there are some big counters in the listed property sector. Growthpoint, for instance, is the biggest listed property company. And we've seen a substantial number of listings over the last few years, as well as mergers. So the sector's been a lot of activity in the sector. It's primarily driven by the fact that we're in a low interest rate environment. So the last, since call it mid-2009, there's been a slow and steady decrease in interest rates, which has increased the bid in the property sector.
Paul, you alluded to it a little earlier, but for you, what's the appeal?
The appeal is, although you've seen a 12 to 14% fall in the last 4 weeks in the index, the listed property index, it hasn't affected the income stream that comes from those companies, from the listed property companies, the rentals. The income stream has been rising just about every year for the last 20, 30 years. I think there was 1 year where it might have been slightly down. So, investors are hurting a bit because the capital has fallen, but a lot of them buy those shares or property unit trusts because of the income stream, and that remains unchanged from the activity of the last month, which was partly caused by the biggest company, Growthpoint, having a share issue, raising money at a difficult time when the rand was collapsing and then the bond yield started going up. So it was a whole lot of things came together that caused a sharp correction, and it's caused quite a few tears. But at the same time, it's still up 27% in the last 12 months, even after this correction. So, if you believe the bond yields are steady here and they could actually decline again, then the property shares look like a good, attractive investment.
Let's bring Francois Veruli in. He's a property economist, professor at the University of Cape Town, UCT. Morning, Francois. Looking at what you've just heard about the size of the market, the changes in the market, the new listings, and also some consolidation among those big companies. And then there have been some changes, like the REITs, another acronym for South Africa, the Real Estate Investment Trusts. So how has that changed the market, and how would you assess it as an investment destination at the moment?
I think the thing to remember is that we had one of the biggest property booms that South Africa had seen since the Second World War, which came to an end at around 2007, 2008. And the listed sector has done well. The fundamentals have probably not even been so great. Vacancy rates are fairly high, but the decline in interest rates that we've seen has really played a role in underpinning the market. The REIT structures, we still have to see the outcome of that, but I think it can only be good for the sector going forward. But there are risks in the sector. We've got a situation, like I mentioned, of vacancy rates. We also have the operating costs in the industry coming under pressure. So the fundamentals are probably not as stable as they would have been 5 or 6 months ago.
Morris, how are you weighing up that risk opportunity metric right now? Where does that sit?
Well, I think firstly, I think the fundamentals are far better than they were, let's say, at the middle of 2009. So the vacancies are still there, and specifically in the office sector, but it's reduced substantially since 2009. The fundamental and earnings coming out of the different companies has been growing above market expectation. So we've seen good income growth, steady income growth, but the big factor at the moment's been the interest rate market. So more than anything else, last week was the biggest down move in the property sector seen ever since 2002. So it's a huge move, and that huge move is got investors a bit concerned. I think a lot of that has nothing to do with South African listed property. It's a lot to do with overseas bond yields, and it's really a function of, over long term, I think property is still considered an excellent asset class. Over the shorter term, you're going to have to take a view on interest rates.
Francois, looking at the residential aspect, I remember at the IPD conference a couple of years ago, it was highlighted how our commercial and industrial property, good exposure, very sophisticated market, but lagging behind on the residential. Is that going to change? Is it an opportunity for people to get into? And if so, how do big investors get into residential property? You don't buy someone's house. Do you buy a housing estate? What do you do?
I think that's exactly the point. A pension fund or a REIT does not walk down the street buying house by house by house. So really the structure of the South African property market has not been particularly attractive to institutional investors or the listed fund. There's been a lot of talk over the last few years about the opportunity of listing a residential fund. We've seen there was a habitat fund that was looked at a few years ago. The yields were not quite right at the point. But I still believe that there are some fairly big portfolios being put together at the moment in the residential property market. And I'm still taking the argument that the residential property market is probably where the commercial property market was in the late 70s, early 80s when we saw the first listings taking place. I still believe it's an anomaly that we don't have a residential fund. And I think over the next few years that could well change. I think the issue is also that we used to have this world of either you were in the commercial property market or the residential property market. I think the greater number of mixed-use developments is also changing. So I think some of the funds will find themselves in the residential property market. So I think that this is an environment that will change. But as you rightly highlighted, the structure of what we are doing at the moment is not attractive. We really have to go for that 1 billion rand housing development in order to see institutions enter the market.
What's likely to shift that landscape even further is the fact that we're looking at unlisted property and the stock sitting on that end remaining substantial at this stage, and many predicting that that's going to be entering the listed fray.
I think that, that's quite an interesting point to raise. I think it comes down to the REIT legislation that you raised earlier, which is essentially a tax dispensation for property companies, which the unlisted property companies don't have. It essentially allows income to flow through to investors, as well as one of the huge benefits is the capital gains. So we think REIT legislation is going to create a lot of opportunity in the sector over the next few years. Mm-hmm. We're seeing a number of big funds unlisted funds looking to list. It's not going to impact all the pension funds that own some of the iconic assets, such as Sandton City, which is held by Liberty. That's unlikely to come into the listed space. Because that tax benefit doesn't really apply to them. But it will mean that if you're an unlisted property developer or property fund, you're either going to look to list or you're going to look to sell to a listed company.
Paul, looking at so much money wrapped up in the unlisted area, I don't know how that compares to other sectors, but it sounds like a lot of money. Can one get in there through investment holding companies? You know, these companies which you buy shares in because they buy shares in companies, and perhaps they've got access through private equity to that unlisted sector.
I'm not aware of, they used to be on the JSE many years ago, but I don't think, the Glen Annals and companies like that, some of which went bankrupt. But I'm not aware of them at the moment, that you have to go into the listed space. But, talking about residential property, offshore, if you look at the global listed property index, I think residential could make up as much as 15% of it, or 12 to 15%. So it's a big factor on the offshore market, especially in the US, and it's apartment complexes, it's blocks of flats. Condominiums, yes. So they do it there, but they're able to get competitive returns, whereas here, I don't think you can on the residential side get a 6 to 7% potential dividend yield like the commercial property ones are doing, and I think that's the problem. but it's attractive offshore.
Yeah, certainly when it comes to the outlook, Francois, we had Morris highlighting that when it comes to that outlook, you've got to take a view on interest rates at the end of the day. Where does your view sit in that regard?
First, I think let me just also move back to a former point. I think it's quite right. We have a lot of property that is still unlisted in this country. If you just look at the government properties, if you look at the listed funds, of the pension funds, I think there's still a fair amount that could be brought into the market. So I think we could still have some interesting times on that. And maybe just before moving to the fundamentals, the other thing to remember is quite a number of investors are also now moving beyond the South African borders. And so South Africa is no longer the only game that the listed funds are going to be looking at. But just to move back to the fundamentals. I think what we're really seeing at the moment is a slow improvement of the fundamentals. I would argue that we are probably where the market would have been at around 2002, 2003. So we really still have a few years to go before we see the height of the property cycle. What will be important in that respect is, and I've seen it on the past, we really need about 3 or 4 quarters of strong economic growth, well above 3% before the market moves up to its heights. The South African property cycle has a boom. Every 20 years we have a major construction boom. So we saw it in the 80s, 2001. So we still have a while to go. I would argue 2015, 16, 17 is probably where we will start seeing the market really strengthening as far as the vacancy rates are concerned. So yes, it will be a slow movement up the property cycle in the next 2 or 3 years.